morning, again, we're going to take a look at gold, but first of all, we're going to look at the monthly chart. I know I went through this last week with you, but it's still very prevalent and extremely important. If you look at what gold did when we broke out of this 38.2 Fibonacci, up we went. But what was important is that we had a return to the break point. Now what I'm going to do, you can see that line there, you can see since 2013, we have held below 1385, 1380. So now you've got that in your mind, let's take a look at the weekly. So if we take a look at the weekly, you can see that we came down, okay, a couple of weeks ago, we came down nearly to the point of break. We got down to 1381. Our fib levels were at 1379, 1378. We knew 1380 was the level. We had the order in, blah, 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 blah. But the important point is that it made that break. It returned to the break point, and we've carried on higher. Now, what the monthly and the weekly chart is showing me is that gold goes higher. You know, we can dress it up as much as we like, but the point of the fact of the matter is gold is in an uptrend. Okay, when you think about where we've come from in gold and where we've gone down to, breaking that 38.2 was critical for gold, absolutely critical, and we did it, and it hasn't done it since 2013. So where can we go? Let's look back at the monthly. When you eyeball the chart, the very first level you see across here is this low here, and that is coming in at 1477. Okay. If you look at the 50% fib, that is 1482. Look across here as well. The 1st of May 2013, the high 1488. So your general view of gold is this is where it's going to go, because it's the natural place for gold to gravitate towards. It needs something to go for. You know, markets just do not move for the fun of it. They need a level to aim for. Something that they can see, something that is visual, something that isn't fundamental, that's going to baffle them. Just by getting up that monthly chart, you can see in a heartbeat that 1482 is a really good projected target for this market. You can see here that when we based back in December 2015, and we've had our little ups and downs since then, but we've always stayed within an uptrend. Now if you look at this whole pattern here, I know this is going to blow your brains, but if you look at this whole pattern here, it's a base pattern. It's a base pattern within a large uptrend, okay? So when you go back in history, I can go back further, seriously, but I'm not. But when you go back to 2000, you can see what gold did. It's there, up, then down we came, you know, and by and large, if you could put this on, which I'm just about to do for you. So if we take the long-term fib, you can see that this pullback that we had in gold down to January 16, December 15, just dipped below the 50% line of that whole move higher. And I'm sure if I went back years and years and years and years and years, more years, it would even be better correlated. But what I say is this pattern, okay, is a continuation pattern of this trend. You can't ignore it. It's there in black and white. So we've got that in our head. Let's now go back and look at the weekly chart. So we've got an idea now where we're going to head to. We would be buying any dips in gold. We're looking at between 1400 and 1379. But you know what? If we cannot this week break down below 1400, buy it. Doesn't matter what level, just buy it. hold it, because the market will go higher. And you know that your stops are going to be in quite a good position, because if we start to go back down here, we don't want gold. But we will want gold overall, because gold is, I think, going to go higher. I'll take a quick look at the daily with you. Yes, we've had that little double top there just in front. You can see that there, 1439. That one was 1437. Okay, we came down. It's a continuation pattern, this. All right. If it breaks 1440, you're long. It's that simple. Doesn't matter. Buy it. But if you want to play around within this consolidation phase, which gold does do, you're buying down to 1385, stops below, you're covering up here, stops above, and you're buying a break of that double top. Double tops and double bottoms hold. Triples rarely do. And I think gold's got the bit between its teeth now. It's made the break, it's sustained the break, it's had a return to the break point. The only way is up. What can't go down has to go higher. Good luck, everybody, and I will catch you all later on the desk.